Good morning, everybody. Thanks very much for joining this webinar. First of all, assuming you've now submitted your BFR, congratulations. The summer now starts. And we're going to show you how people are using systems to populate theirs. And we're also going to do a little bit to cover just some things around DFE chart of accounts. We get asked lots of questions around DFE chart of accounts, so it's as good as opportunity as ever to just talk about it and go through some of the questions we get. So probably half an hour this morning session. Don't think we'll keep you full for the full hour. If you do have any questions, please use the Q&A section. The chat is open as well. And I'm also going to put my email address in the chat, so feel free to drop anything over to me as we go. So, okay, so how to automate your BFR using map focus tools. Let's go through the agenda. So we're going to do, like I said, we're going to look at the DFE chart of accounts, go through some of the questions that we get, perhaps some hints and tips, but just the stuff we always get. So a bit of an intro into the chart of accounts. Also, I don't know if you guys have adopted it, whether you're thinking about it. I think most of our customers, I'll cover it in a bit more detail, are thinking about it. Very few have actually adopted it as their primary code structure, but there are some. We'll then talk about how to systemize your forecast. So obviously a big part of the BFR, the middle bit, is the forecast as at the 31st of March. So that is actuals up to the end of March, and then forecast from April through to August. So we're going to show you how to systemize that, because if you can systemize that part of it, that's a big chunk of the BFR, and it might be BFRO next year. I think they have confirmed that they are going back to 2 separate returns, which is a bit disappointing because there's a lot of work involved. So I'd much rather do 1 piece of work than 2, but we will see what happens. I think the sector is pushing fairly hard on a combined form going forwards, but I don't think Treasury like it too much. Then we'll actually show you the BFR process and actually how to populate that from IMP. Probably more importantly, or as important, is what we don't populate as well. So, you know, we're by no means saying magic wand, every single question, every single box is filled in. There's a lot of meat in there, and I'll just clarify what we do, which is the bulk of the numbers, and what we don't do is the things around disclosure and questions and things like that. And also, how do you make sure it's reconciled? So, you know, it's very well running a report, but how do we know the numbers that we've put into the BFR bear any relevance to what we're preparing in year as part of the actuals or the budget or the forecast? So that's kind of the format of the session. And like I say, any questions, just drop them in the chat, and we'll pick them up. I'll try and spot them as we go. Okay, so DFE chart of accounts, FAQs. So I think it's safe to say the sector on the whole is still undecided around DFE chart of accounts. And then therefore the first question that we get quite a lot is, look, when's it going to be mandatory? I think a lot of people are assuming that it will become mandatory. I've been involved in the discussions with the DFE probably nearly 5 years now around this, and they've been very clear at every meeting they've had with sector people like us and providers that it will not be a mandatory requirement. Okay, I think they are thinking that they will make it more and more frequently required, so therefore they'll be increasing the volume of things to be submitted to them. But actually, I don't think they care whether it's the code being used in the finance system or you've mapped to it and therefore you do all your submissions for it. So I don't see it becoming mandatory. They don't really mind whether you use it or not, but as long as they get their reports and as long as you've mapped to it, they're happy. They don't really care if it's in the system or not. For those that have thought about adopting it, and you know, for me, in the customers that we've seen, it's not a bad income and expenditure. The balance sheet is a whole different ball game, and I think it's horrendous, and a lot of customers think it's horrendous. But from an income and expenditure perspective, it's as good as any of the other chart of accounts that are out there from any of the systems providers, if not perhaps a bit better. So I do think it's not a bad chart of accounts, but a lot of people are concerned because they've got lots of detail in their accounts. Well, I'll show you how they have accommodated extra detail. So therefore, yes, you can use their chart of accounts, but you do have the ability to add your own codes within the structure. So I'll show you that. And you know, a lot of people, I would say, the vast majority of our customer base, they've not adopted it as their primary code. They've developed a mechanism of being able to report against it, and they're very happy with that, and they've got no plans to change that any further. If there's most of the customers as well that have adopted it as their primary code have done so because they've changed systems, and therefore they need a new chart of accounts anyway. You know, if you're changing systems and you need a new chart of accounts, then I think there's worse things to do than adopt it. But I've seen very, very few decide to completely restructure their finance system and take on a brand new chart of accounts. So hopefully that gives you a bit of comfort around perhaps where you are on that journey. Okay, so where are we up to next? Sorry, I've got all of these screens open and I haven't worked it out yet. Okay, so let's have a look at the chart of accounts. So firstly, this is the full chart of accounts document that I've downloaded this morning, and it is worth checking for this every year because they do provide an annual update. There is a nice information sheet at the beginning that actually explains all of the columns and how it works, and it is a well thought out document. So if you've not spent lots of time in reviewing it, perhaps it's a summer job, but if you do want to get in just to get a good understanding, there is a good explanation. And this is the 21-22 version, and it will change every year, but they do a very helpful change control document that outline all of the changes. This is the changes from the 2021 baseline version. So for BFR purposes, there are some that make a difference, and they've been quite helpful in putting a filter on to say, okay, let's look at the changes that impact BFR. So therefore, there are 2 existing codes that have changed their mapping for BFRO purposes. Just the one thing to think about is they've also added some new codes. So always worth reviewing to see if you should have some extra codes in there. So these are the new codes this year, brand new codes. So worth a look. We've already got them adopted, but every year we set a reminder in about March, April time. They do tell you online when it's been updated. It says last updated date, so worth a look. And then when we actually look at the chart of accounts, so there are loads of columns, okay? But the columns to really think about are, column A, which is the actual account code, and column F, which is the code description. Everything else is a mapping, all right? So let me just take a nice code. So let's look at catering income from pupils. Okay, that there is a fairly generic code. 525300 is the code, catering income from pupils. So if you want additional detail for your catering income, for example, so you want to break that down by self-funded catering income from pupils, or income from pupils that's been as a result of them cleaning, so it's a contra. I'm really bad at these examples, but let's say I wanted more analysis within my catering income from pupils. The last digit is yours, so you will see that all of their codes end with a 0, and therefore you can have 1 to 9 as your own codes that always roll up into the overall 525300. So therefore, if you did need extra detail, you can do 525301, and then there's all the other codes you need to do, but ultimately I could say contra income from pupils. So they have given you the ability to have an extra 9 codes underneath all of their codes. For all of their reporting purposes, it all rolls up into this one. But if you were thinking, I've got lots of detail in my accounts which I don't want to lose, you are able to retain that. So I just wanted to cover that just before we got stuck into the system, as that's something that we get asked all the time, and people have used this quite successfully as well. Okay, so that's chart of accounts. I'm going to move now on to the forecast, and actually how you can systemize your forecast in, I'll show you in IMP, and ultimately how you can do a forecast as at the end of March. So I'm just going to check to see if any questions have come in. I don't think they have. No, they haven't. Q&A. No, we're all good. Okay, so forecasting within IMP. So what we do within IMP, we're a system that sits in between all of the core systems around this. So we take a feed from your finance system. We've got a bi-directional integration with Access Dimensions through Hogue. We've got it with PS Financials as a native integration that sits on their cloud. We're developing the Sage version as we speak, but we've also got manual integrations with all of the other providers. So I think there's 12 systems in total that are interacting with IMP. And IMP stands for Integrated Map Platform, and therefore, you know, the clue is in the name. We're system agnostic. We're really keen to integrate with whatever system might be out there in the sector. And what we do is we import the transactional detail from the income and expenditure. That then gives us something like this. So on a monthly basis, and you have to excuse the quality of the demo data, but ultimately I've got all of my monthly actuals that have been pulled in. Here I've got a row for each school. This is one flavor of how we can present the data. This is all in Excel, so this is refreshable, but I'm just going to use this to explain before I jump in. So let me drill down on a line in BIS. So let's look at my school BIS, which is Bishop's Primary, and I go into other income and catering income. That show me this is everything that's happened year to date. That's coming from our finance system. This is then what the working budget is saying is going to happen between now and the end of the year based on our working budget. Okay, so our working forecast, and then we're comparing that against our approved budget. Okay, so we've got a variance. But if I'm looking at this line as at the end of March, thinking, right, well, I don't think we're going to be at 20,900 as our outturn at the end of the year. I think because of COVID, we're not getting kids into the canteen. I need to down tune this. Okay, so I'm actually going to down tune this forecast line. So therefore, within IMP, we've got a forecast preparation area that allows you to fine tune all of these lines in the system. So I'm just going to bring in IMP and show you what that looks like. Ignore this mapping. I will show you what that means shortly. But I'm going to go into my school for Bishop's Primary. I'm going to drop into the current year because that's where I am. And I'm just putting a filter on here. One thing that we've got in IMP that's quite unique is that it is a map-based system. So if I'm an administrator, I can navigate around the system and look at the data and edit the data for all of the schools, or I can focus on an individual school. So I'm just going to say, yeah, I just want to do the forecast for Bishop's Primary, so I'm going to put a filter on. It just means when I go into my forecast, I'm not going to see all of the data for all of my schools. It might be times where I want to do that, but now I know I'm working on a particular school, we can put a filter on, so it just excludes some of the noise. So I'm now going to go to my forecasting and prepare simple forecast. And it is a simple forecast. So I've got BIS, I've got all of my codes here. I've got my nominal codes, my departments. This is showing me my actuals to date, what's remaining in my working forecast. Therefore, my full-year forecast is that, my full-year budget is that. Therefore, I've got a variance of this. All of the screens in IMP, you can choose which columns you want, you can move them around, you can get rid of them, and when you're done, you can save the format, and that then saves your favorite view. But I'm going to do this with actuals up to March. Okay, so we've got an individual forecast for every month of the year, but for the BFR, actuals up to March, and then forecast from April through to the end of August. So I'm going into my catering here, so I can either scroll through, or I can just, as with all screens in IMP, you can just search at the top. And here's that catering line that I showed you. I've got a current forecast of 20,000 against a full year budget of 25, but I need to down tune this. So I can double click. And I can't change anything that's happened to date. So that's come through from my finance system. In this case, it's PS Financials. If I want to make any changes to my year-to-date actuals, I do it in my finance system and I pull it through again. But otherwise, I can't change anything. What I can do is change going forward. So I know I need to down tune this by, let's say, £5,000, because I just don't think we're going to get the students in the canteen. So I can do an annual adjustment of 5,000. That's then going to spread it based on the profile over the remaining months, but I can overwrite this or do this on a monthly basis. So I can say, yeah, we're going to get really badly hit in April because of Easter holidays. And actually, yeah, August is going to be really bad as well. So let's do 2121.29. You know, I got my profiling wrong. But I've now revised my forecast from 20,000 to 13,000. And I can also put notes in here to say COVID adjustment due to lack of pupils, etc., etc. And now I can make that adjustment on as many lines as I want to, okay? And I'm now preparing my forecast. So as at the end of March, actuals up to March, where I think we're going to be in all of my schools and all of my lines as at the end of the year. Now, I do that on as many lines as I want, but there will be a number of lines that are really difficult to profile accurately. So if we think about curriculum pots, I give my curriculum department £1,200. I don't know when they're going to spend it. They don't know when they're going to spend it. I profile it monthly. They spend it all in September. There's loads of those examples where timing differences just cause a pain because they've spent all their budget in September, but because of the profile £100 a month, it's showing an overspend for the whole year. So for any of those lines that you think, well, look, I just know they're going to come back to the budget number. Okay, the timing's out, they're either up year to date or down year to date, but I know by the end of the year they're going to come back in line. Then what I can do is, let's do that, say, for example, on my lettings income, which is actually a bad example in COVID times. Sorry, I didn't mean to chuckle. Let's do that on my book spend. Okay, so I've got my books budget in here. Actual to date is that. I've got a full year budget. Let's do this one here, teaching materials, not IT. So I come in here and I can say, well, look, that's what's happened year to date. That's what the budget's going to say, but I'm actually forecasting an underspend. I can tick this box to say, I know this line is going to come back to my budget and therefore automatically balance the remaining months to forecast back to my budget number. And I can add a note as well. But then because this is ticked every single month when I now do my forecast, all of the lines that I've said, yeah, these are just going to come back to the budget value, are just going to automatically adjust themselves. So all of your time and focus can be spent on those lines that you can't confidently say we'll come back to that line. So I've now set that up, and I just build up my forecast now doing these and as many as I need to do. But then all of this is then systemized. So I've not got anything in Excel. I've not got anything. I've not got a spreadsheet for each school or even a version of this for each school. Everything is in the one system. So I know as at the end of March where we're heading for the end of the year. So if I now just show you a slightly different flavor, but I'm going to go into my forecasting report summary. As with all of our reports, you can do it for a particular hub, your regional hub. You can do it for a particular school type. So I could just look at my primaries or my secondaries or my special schools. You could choose individual schools, a group of schools, or all schools. And within IMP as well, we give you the option, because we map everybody to the DFE chart of accounts, which I'm going to show a bit more detail shortly. You can present your accounts by the DFE headings, or you can use your own groupings per your finance system. I'm choosing actuals up to the end of March. What is my approved budget? Well, that's that one there. And I can also group by department or cost center if I've got particular stakeholders that like it that way. And I can also format as thousands. So if I think that head teachers or governors or trustees, I don't want them saying, why is there a £15 variance on pencils? By rounding it to thousands, it removes a lot of the noise, and therefore, there's less variances, and it really focuses attention to probably the bigger numbers. I'll just run this report. So this is now looking at my forecast for my whole trust as at the end of March, that's been fine-tuned on a line-by-line basis, and also narratives been added as well. So the first thing we show, I've got unmapped nominal codes, which I'm going to show you in BFR how to resolve. So we're showing you that here. But I've now got my summary year-to-date actuals budget variance for all of my schools, and I've then got my full-year forecast versus my full-year approved budget with my variance. We've always got a rolling 3-year reserves note as well, with year 1 being my current outturn, which is my current adjusted forecast, and year 2 and 3. So anything I do now in the system is always continually changing my year 2 and year 3. So we've tried really hard to join the forecasting process to the budgeting process. So you don't have a forecasting thing you're doing all year, and then you've got to replicate all of those changes in your budget when you then come to do your budgeting cycle. Ours is one iterative process through budgeting and through forecasting. I can drill down on this page on the report, so I can go down here, or I can also, I've got a page for each school that then shows me each school in a bit more detail. So I can come in here and look at, let's go into my other income. Here's then my catering income line with now my revised forecast of 13,783, and I can see the detail within that by cost center, and I've also got my notes. Okay, so all of that narrative that I'm putting in as we do the forecast come through onto the report, and they're doing that commentary piece as you're doing the details. And it's also drillable. So because we pulled in the transactional data from your finance system, you can look at that transactional data from IMP, and that's full transaction detail. And you can also drill down on your forecast and say, well, how have we got to a forecast of 13,783? This gives you the full reconciliation back. So it gives you, that's what's happened in our finance system. That's what our working budget is saying is going to happen between now and the end of the year. And these are the adjustments that I've made as part of that forecast piece. So you're never in doubt how you've got to a forecast figure. So that's systemizing the forecast, and then all of the reporting is generally done in IMP because we've got so much data. We've got all your finance data, we've got your budget data, staff and pupils. Most people are using IMP as their primary reporting tool. But now I've showed you how to do the forecast in IMP as at March, which is the bit used for the BFR. I'm just going to jump back now to BFR and just talk a bit more about how that works. So that forecast piece that we've got, let me just skip through here. You will all be very familiar with this, I imagine, as you've probably spent a lot of time over the last few weeks in this spreadsheet. But just as a reminder, there's 3 parts to the BFR and how these are populated from IMP. So the first part is your prior year actuals. Okay, so we import those as part of our interface, or they can be imported in the same way. So we always take this year and last year out of the finance system. So therefore those actuals are available in IMP and therefore are able to be produced directly into the return. This middle section is the forecast I just showed you how to produce in IMP. So we've got actuals September to March that we pulled through from your finance system, and then a calculated forecast, which is the working budget plus any adjustments. And then forecast year 1 is next year's rolled forward budget values. And then at the bottom, we've also got that 3-year forecast as well, which is all of our rolled forward values from IMP. We don't do all of the return, okay? So we don't do any of the boxes that's, what's your MAT details, what's your address, what's your URN, what's your responses to these validation questions. You still need to do that, but we populate all of the numerical values other than there's a handful of numbers that don't come through. So we don't do the balance sheet, which is section 6 to 8, which is cash reserves, provisions, things like that. And we don't do these, I think, 10 lines that are, disclosure lines, basically, with kind of capital values transferred in, some of that stuff around balance sheet disclosures. So we don't do those. But what we do is everything else. So now let's show you our BFR template. So I'm just going to close this BFR template. And before we do, there's also an option. So if you don't want to map your codes or use the DFE chart of accounts, you can produce a mapping. We've got some templates that some customers use. So if they're, for whatever reason, they've not done their forecast, they've not got their actuals in IMP, we provide everyone with a mapping template that allows them to take, this is a PSF version, but we put your nominal codes in here, and we then provide you with a mapping template to map your codes to the DFE chart of accounts. And therefore, if you're not using IMP, but you just want a really good way of having a mapping of your codes to the BFR or the DFE chart of accounts, give us a shout. Happy to provide you with this template, and then you can use this as your mapping for any other reports and returns. You're going to need it for AAR, BFRO, BFR next year. Happy to provide you this template. Let's look at BFR and how it's populated from IMP. So let me just open it up. I just check if there's any questions. I don't think there's been any questions, but if any do, or you've thought of any, please feel free to drop them in the chat or the Q&A panel. And so here is the BFR template. So this tab is, I'm sure you recognize, I'm sure you have nightmares about it. All of these tabs along the bottom are the standard BFR tabs that come straight from the spreadsheet that we've downloaded. But we've put in 5 additional tabs. I'm going to work through these left to right. So the first tab is, how do we connect this spreadsheet to your IMP system? So the first thing you need to do is copy your API token. So within IMP, there's a button to say, show me my API token. You copy that code. It's a long string of text called, I think it's called a GUID or something strange. You paste that into this cell. This then knows who you are, because that GUID is unique to you as a user of IMP, and therefore hopefully you're an administrator. It knows, right, I know what I have access to within the IMP database. We're then able to tell it, so if you've not used IMP for actuals for 1920, you can say, yeah, actually, no, don't bother bringing those through. You know, if you've not done your forecast in IMP, you could say, don't bother bringing that through. And then you've also got, which scenario do I want to use to populate my 3-year budget forecast in IMP? So you can choose all the different ones on this drop down. We've also got the ability to exclude some schools. So if, you know, we've got lots of customers that within their budgets, they've got a sports centre, they've got, I think we've got a caravan park, we've got all sorts of things. But if there's locations or schools that aren't schools, you know, locations within your systems that you don't want to be part of the BFR, you can just select them here, and then that will exclude them from everything else in the report. So once you've populated this, all you then do, and I'm going to go onto this page to show it happening in real time, you go data and refresh all, and that's it. And that's going to go off via our API and go and grab all of those data sets from IMP, run them through the mapping and put them into the right box. You can see down there it's saying running background query, and shortly you'll see some numbers coming through now. So we've done the first column, now done the second column, and finally we will do column 3. So I've now populated all of these sections from our API that are in here, and I can scroll down and show you these are all now populated. The bit that isn't is this balance sheet section down here, and we've also populated this 3-year forecast on the bottom. But this is now refreshable. So therefore, the first time you pull your numbers through, I imagine there's going to be a few things that you need to correct. But I can now make all of my changes with IMP. I can change my forecast, I can change my actuals, I can change my budget values, and I keep just pressing refresh all, and that's going to bring through the new data. So there's no preparation work in putting the numbers in here. You can get your numbers right in IMP, but all of that work is then removed. But there are a couple of things I need to check to make sure that I've got my complete data set within this BFR. So we've put a couple of tabs at the bottom that you need to work through. The first of which is my unmapped finance code. So which of my finance codes or nominal codes within IMP are not mapped to the BFR. And there's 2 reasons why it might not be mapped to the BFR. One is it's a code that is not reportable within the BFR. So therefore we've got kind of top slice or central charges. They're not reportable in the BFR, so therefore they're in here and they should be in here, so they're fine. LGPS deficit, that is also something that isn't part of the BFR return, so therefore I'm happy that that is sitting within here. But I do have my teachers' salaries, which is an important line, okay? So there's no getting around it. I'm thinking, right, this is unmapped, therefore I need to go into IMP and tell the system where my teacher's salary code needs to go within the BFR. So within IMP, excuse me, I just go to my codes and my finance codes and find my finance code for 2000, which is, I can either scroll or I can just go in here and do a filter. Here's my teacher salaries, and you can see it's not mapped to the DFE chart of accounts. So therefore I can double click and I can just come in here and set it in teacher, and then I've got all my teacher nominal codes. These are my income codes, teachers' wages and salaries. So I know it should be under 612100. So I can select that there, save that, and go back to my spreadsheet and refresh it. So now when I refresh it, I can right click, I can just do this one, I think. Oh no, I can't. Yes, I can. I've refreshed that, and that teacher's nominal has now disappeared. So I know that's mapped. And I'm now comfortable that everything else that is being excluded from my BFR are codes which are not BFR codes. So great, we're good. Every code in IMP is either mapped to the BFR or they shouldn't be mapped to the BFR, so I'm happy. Next up is around capital expenditure. Okay, so in their wisdom, the DFE have made the only way you can put capital expenditure into the BFR or any of the other returns is by putting it into the balance sheet. Now, I know a lot of people that have a lot of capital expenditure that's not in the balance sheet, so it sits in the P&L, and I'm not going to get into the revenue contribution from capital and all the rest of it, but because all of the capital expenditure codes are balance sheet DFE codes, we don't hold those in IMP. So therefore we need to say we've got a mapping code that says this is capital expenditure, but then within here we then need to say, okay, well, where do I then want this capital expenditure to go in the BFR? So I can look at, I can either go and look at my BFR and think, right, so I know I've got furniture and equipment and IT equipment in my IMP, and I need to now tell it where it needs to go within the BFR. So if I have a quick look at my BFR to get the row numbers, I can come in here and look at my capital expenditure section, and let's say, yeah, other fixed assets, yeah, these are funded by SFA grants, so I'm going to go 636. Okay, so I'll try not to remember, try not to forget that, 636. So then over here, we've just got a little mapping table where I go, right, okay, finance code 5200 needs to go to BFR 636, okay, which is that one there. And yeah, 5300 is also 636. Okay, so let me just map that one. 636 shows you here where it's mapped, but I now know I've mapped all of my capital codes to BFR lines because we weren't able to, because we don't have the balance sheet codes in IMP. So now they're mapped, I can then move on to my reconciliation, which is the last part. So this is now, right, I've made sure all my codes are mapped. I've made sure that anything that is capital expenditure is now mapped to the relevant line within the BFR. And then the last bit is to look at my reconciliation. And this now shows me, actually I now need to refresh it again because I've mapped everything. And it's just running through all of these at the bottom. And they're still going. And I'm doing the final one now. Just doing the last 3 years, you can see these numbers changing. And we're done. Okay, so my reconciliation is now telling me this is what IMP, the overall surplus deficit number is for last year's actuals, is that. My forecast report is that, and you might remember that number, 122,511, that's my forecast surplus deficit as at the 31st of March. And then I've got these as my surplus deficit values for budgets 21-22, 22-23, and 23-24. I've then got, these are the rows that I've deliberately excluded. So these are my unmapped codes, but the values that I'm happy with. So that's my LGPS pension deficit, and it's also my top slice or my central charge, which should now off to zero anyway. There's also a funky line in here because the way they've built the BFR is the revenue contribution to capital, they've fudged it. So therefore they're not looking for the revenue contribution to capital and the revenue contribution from revenue. They just take one number and they equal it. So therefore they've not got all of the numbers. So that's our line there. This is then what the BFR is showing for each of these years. And please bear in mind the BFR maps or rounds to the nearest thousand. Okay, so it doesn't give actual numbers, it gives a rounding to the nearest thousand. So therefore it's never going to reconcile to the penny. But when your differences are around 1,000, you know that any differences that we've now got on our reconciliation are due to the rounding. And that is the final step to make sure you're happy with your numbers in IMP are now being accurately reflected and completely reflected within your BFR. And I say all that then leaves is the balance sheet and all of these questions and answers that you've got to do. But all of the numbers are then refreshable. And I think that is the last bit on this session. So hopefully that's given you all a good feel for how, if you can systemize, it's always the forecast that I think puts the spanner in the work for this return. But if you can systemize your forecast, if you can somehow map to the DFE chart of accounts, either as your primary code or via a mapping, and a spreadsheet mapping is fine because it just allows you to do an easy lookup to say, look, here's my trial balance, let's run it through my mapping, and therefore I've got my trial balance by DFE code rather than by my actual code. And a feel for also the bits that aren't in the BFR, how you map your capital, and therefore have comfort that it all agrees. So that is the end of the session. That was everything that I was going to go through during this. If any of you have any questions, thanks for giving up your time as well, actually, on a Friday in the summer holidays. I wasn't quite sure how many we were going to get to this, but we got a few. We had about 20 people registered, so I think they're going to be looking at recordings. We do have recordings available as well, so if you want to look at this again or send it to a colleague, it has been recorded. But yeah, if you've got any questions, feel free to send them through now or drop me an email at will@impsoftware.co.uk. Otherwise, you're excused. Enjoy the rest of your day. Enjoy the rest of the summer. I'm in Devon. The weather is rubbish. I hope it's better where you are. And yeah, have a great summer, and well done again for the BFR. And if you'd like IMP to help with your BFR for next year, obviously more than happy to give you more of a feel for the system as well. So thanks again for joining.